Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want.
So we have had exactly what we talked about here on the Nasdaq. So it's come down here quite nicely. We wanted it to pull back here. It didn't hit that level and then come the whole way back down here. So it's come back into this area. Now the problem is that which of these levels do we look at? And when we're sitting here, I did talk about coming back to this level here. So this level seems to be a little bit better across here. So look, we have at this particular point, so we have 1, 2, 3, 4, 5 touches. Yes, we have, this is probably class as 6th, and this one broke it. Okay, so we do have touches there. And now over here, again, we class this as a touch and back to this point. Now, if you were taking this long, you would have to have your stop loss below this low here. If you were taking this as a limit order, you'd have to have that there. If you were taking this as just a buy stop, your entry above that there, and your stop loss below it. Now the problem is that we are now going counter trend. How far is this going to go? And if I'm doing that, I would have my take profit at 1-to-1. Now you could say that, but look here, Henry, this was similar, and it took off. Absolutely, it could. This could be a catalyst and might go back up to about there again. Now, if you think that's going to happen, what you do is you move your take profit out of the way. And then once it gets to 1-to-1, you either trail your stop loss, you par close the position, and you move your stop loss inside break even. Okay, but that's something you need to be aware of. Now, looking at this, it looks like the Nasdaq is up. Let me have a quick look at the S&P. Again, here similar. S&P is up, and the Dow is also up, and this is the futures market. So this is not happened yet. So this is the futures market. Now, by the time this goes live at 1 o'clock, this may have changed. But if we have a quick look at the big 5 or 6, Apple, it hasn't had the pre-market yet. The pre-market, I won't see that yet. I thought I might see the post-market, but I don't. But it's come back down to this level. It had a rejection there, and this level was from here. Look, 1, 2, 3, 4. So that's why we had that rejection on Apple. Facebook hasn't had much of a rejection there, if I'm being honest. Facebook hasn't had much of a rejection, but there is a double sort of bottom down there. So it has come back down into that very same area. Amazon. Doesn't look like Amazon's in a particularly strong area. We had one sort of rejection there, but it's not good enough for me to draw a level in there. So not really on Amazon. Microsoft. Let me have a quick look. And Microsoft is coming into the area. It hasn't quite hit it as of yet, but it's coming back into sort of that area. So here, there, and I retested here a couple of times. So you could argue that it's hit it there, and that's why we're having this rejection. Google. So Google sort of broke that floor there. And look, this trade here, you never got triggered in. It continued dropping. So happy days. We had a limit order on this trade. It never triggered us in. And I'll continue going down. And there doesn't seem to be much through here either. Netflix and Tesla. So Netflix has already bounced off that floor. And we're sort of into that sort of zone, that area. So that's why we have this mini ceilings up here, look. So Netflix is moving pretty flat, pretty sideways at the minute. Literally from that gap, the gap is being used as a ceiling, and it's just bouncing, popped up, and then it's bouncing between these two here. And lastly, Tesla. And for anyone who is in the market and in the know, Tesla had a bit of a drop. Can anyone tell me why Tesla had a bit of a drop? And it had a bit of a drop because Elon Musk tweeted about the war. And any pro-Ukrainian has sort of bitch slapped him over it. So that's why Tesla had a bit of a drop. Will be interesting to see whether it continues to drop because of it, or whether it will jump back out of that. And there's a soft level. I'm not putting in a horizontal for that soft level. Okay, so let's see if it comes back down to there. So we can see the majority of them are at levels where they're potentially bouncing. So that's why the likes of the Nasdaq has already had a little bit of a movement to the upside. So the question is that upside going to hit this level here, this trend line? If it does, is it then going to drop? Is it going to continue and sort of hit the ceiling here and then drop? Is it going to hit this horizontal and drop? Is it going to hit this level and drop? Or is it going to double top and then drop? Or finally, is it going to continue going up? But we are at a point here where we are back at this semi-floor. It has held a little bit. Buyers have jumped in again. And the question is now, is this the beginning of the market sentiment to the upside, or are we still too unstable and continue running to the downside? And that is probably the most likely. We'll probably expect that to pop up and hit a 1-to-1 and then to the downside again. That's probably what we'd expect to happen here. S&P. So the S&P here, we had this trade. It made a lower low, so this trade should have been triggered out. But again, it's come back down and it's hit this lower level that we had. Now the lower level was from this previous high here. Now, if you'd have taken that trade on the lower level, again, it's a big trade. It's a big trade. What's the 1-to-1 on it? There's the 1-to-1. Back on that line. And that's a big level to be going back into. We've had a couple of previous touches here. It's getting into the area of this trend line. and that is we do need a bullish day. Okay, so it'd be nice to have a bullish day on the market. So let's see what happens there. And the same with the likes of the Dow. Again, the Dow has had a more of a bullish day than the likes of the S&P and the Nasdaq. But let's keep an eye on this. This for me is not really trending territory. This is not sort of stuff that I'll really be looking at. The horizontal levels are not good enough, and the momentum for me is not there strong enough. So we talked about this one here, bouncing off this level. Again, it's a historic level. So recently it has smashed through it, but historically this level has been pretty decent. I think if I remember right, there's about 7 or 8 touches. There's 1, 2, 3, 4, 5, 6 there, 6 in just this screen here. But yes, it has historically broken it as well. So this is a softer level, but it has come back down into that very, very same area. Now, we talked about taking this on the smaller time frame. We talked about taking this on a smaller time frame. If you drop up down to the 4-hour chart, look, there was the entry and there was a stop loss. And look what happened. We got triggered in here. It went up. It almost hit our take profit there. Come back down, bounced off the floor again, went back up into a bit of profit, and then triggered us out, look, by a whisker, and then went straight up to hit our take profit. And sometimes being early is worse than being good, okay? So in this particular scenario, we expected the bounce. We anticipated a bounce. Our stop loss was just a fraction too tight. And that's absolutely infuriating sometimes, because when you're right, even though you're right, you can still be wrong. And in this particular instance, we were right about what we expected to happen. We expected to hit the floor. We expected to bounce, but our stop loss wasn't tight enough, or was too tight. A bigger stop loss would have let us have a winner there. Or maybe some of you guys took this trade and actually jumped out of it there when it got to that point. Once it started turning, you could have jumped out of it. So depending on how your trade management went, you had a loss. If you're trailing your stop loss, you also would have had a full loss on that as well, if you're trailing 1% behind. The French CAC was one of these ones because it keeps gapping. I generally tend to stay away from it. The UK 100. Again, let's have a look at this. I know we talked about it coming back and hitting this level, but the risk to reward wasn't enough there. So we talked about it coming back into this level. Drop down to the 4-hour. Again, entry went up here to about 0.5%. Come back down, double bottomed, pop back up, went into a little bit of profit, and then come down, stopped us out, and then we're back up at that double top there at the moment. So again, unfortunately, a little bit early on this. Stop loss wasn't big enough, whatever you like to call it. But the level was still pretty decent. Now, I would have talked to you guys about putting your stop loss in the correct place. Now, historically, this has come down to there. So if you put your stop loss behind there, which is invariably where I would expect to have put it, this trade would still be alive. And where's a 1-to-1? That would be a 1-to-1. So it depends on where your stop loss management was. Whether you put it under the inside bar that was, or the bar that was touching it on the 4-hour, whether you put it below the previous lows. And anyone who's been trading with me a long time, that is where we would have put our stop loss, or would have advised you to put your stop loss if you're looking at it. Unfortunately, that low would have stopped you out. This one wouldn't. But I know most people would have put it behind there and took the chance rather than here. And then anyone who's risk adverse and wants to have a little bit of a gamble would have put it there in the knowledge that it's been broken twice. China, anyone who was in this trade, well done. It almost hit a profit down here. It still looks like it's going to continue down, and I would expect it to hit this floor. So whether you hold tight and wait for it to hit the floor, or once it gets in around this area again, you jump out of it. That would be a 1.5 to 1. Or whether you sit tight and expect it to continue running. So anyone that took that, well done, good trade. And then the Aussie 200 would have hit profit for us. So look, that trade there, stop loss behind the low here. We didn't put our stop loss behind there, put it behind the low. We got a little bit lucky on that one because it didn't come down to a lower low. And it bounced off that, went up and hit our take profit. So anyone that took that, you got a 1.23 to 1 out of that. Well done. Nice to see. So 2 wins and 2 losses. Well, 1 win, 2 losses, and 1 that is still running at the moment. Oil, for me, sort of stay away from it. It's not telling us in any direction that it's wanting to go. It's overall wanting to go down, but there's so many levels, so many ceilings along here. Where does it go? Back to this one, back up here. It's just not following a decent pattern. I want that to pull back into this area. If it hits that ceiling, then we'll be looking to short this. But I wouldn't necessarily be looking to long this, even though it has a decent enough level here. Let's see how today's bars finish. And if today's bar finishes as a nice low test or a nice inside bar, then potentially looking for this to pop to the upside, but not massive. Something I want to bring your attention to quite quickly is Credit Suisse. I don't know whether any of you guys have been watching the markets or looking into Credit Suisse, but Credit Suisse has had a really rough time of it. And there is a huge probability of it having credit fall swaps. Okay, so remember the Big Short? Anyone who's listened to the Big Short, CDOs and all that stuff, and credit default swaps and all this sort of things. So the credit default swaps on Credit Suisse have gone through the roof. They've gone really, really expensive. Now, there's 2 reasons for that happening. One reason is that people are starting to buy it up. And the second reason is that Credit Suisse have a lot of really bad debt on the books. And they are failing to actually pay the mortgage. Okay, now what I mean by that is that just say you put it into your layman's terms. You have a mortgage and you're paying the mortgage off. Inflation goes up, which means that the cost of living goes up, which means that the cost of your goods are now getting expensive. But your mortgage has still stayed the same, so you're paying your mortgage off. Now what's happening is the government are now manipulating the market, and they now want to bring down inflation. So how they do that is they start upping the price of you borrowing money. So the interest rate goes up 1%, then it goes up 2%, it goes up 3%. Now, in theory, this is good because it's bringing down the cost of your goods, but also it's bringing up the price of your mortgage. So now your mortgage, which was, say, £1,000 a month, you are then paying for goods in your grocery bag that was 200 quid one time, then it went up to 400 quid, and just say at the minute it's now £450. But inflation still hasn't kicked in. The inflation still hasn't started to reverse. But what's happened is that interest rate has gone up on the money or the mortgage that you have, which means then that's gone more expensive. And because that's gone more expensive, your mortgage repayments have gone up, plus the inflation is still killing you, which means now that you cannot afford to pay for both of them. Now, that's the point that Credit Suisse are at this particular moment, that they're bringing in money from their loans, but the money that they're bringing in is not servicing the loans that they have. Okay, so that's what's happening at this present moment. And people who are looking at their debt sheet, looking at their balance, looking at their books, they're taking bets on it that they are going to default. And that's what the credit defaults are. And that's what's going on with Credit Suisse. And as we can see here, it's gone quite badly over the last year, and it could continue to drop further. This could be at a point where this drops down to zero. It could be another Lehman Brothers, but let's keep an eye on it and see what's happening. Thank you very much. Bye-bye.